Bond exchange-traded funds offer a way to invest in a basket of bonds through a single ticker symbol. But how do they function? A bond exchange-traded fund is a collection of bonds bundled together into a single security that trades on an exchange like a stock. Instead of buying one bond at a time, these funds allow you to own a piece of a massive, diversified portfolio instantly. These funds provide professional management and daily liquidity, meaning you can buy or sell shares whenever the stock market is open. The biggest difference is that bond funds do not mature, so your principal amount fluctuates based on current interest rates. Longer-term bond funds are generally more sensitive to interest rate changes than short-term ones, which impacts their price volatility. Remember that, while individual bonds promise your money back at maturity, bond funds are subject to market forces and price changes. Understanding these mechanics helps you decide if bond funds fit your goals. Thanks for watching and subscribe for more finance basics.